Hello everyone and welcome to this video today. My name is Teddy Keckstedt from Forex Trading Unlocked, and the webinar today is Best Moving Average Strategies for Day Trading Forex, Easy Crossover Strategy. So this webinar will teach you one of the best moving average crossover strategies that anyone can use in all different markets. The strategy can be applied to Forex, stock, futures, option, and cryptocurrency markets. You may have heard of the moving average crossover strategy, but you most likely are doing it wrong. In this video, you will learn how to stop making mistakes and use the best moving average crossover strategy. Real quickly, we just want to show you our disclaimer to remind you that this webinar, even though we are doing it in real time right now as the markets are trading, there is a little bit of a lag, and this is still for information and educational purposes only. Also, real quickly about me, your presenter, I am Teddy Keckstedt. I have 33 plus years of trading stocks, options, binary options, futures, and Forex. I have a degree in finance from DePaul University. I also have over 20 plus years of trading floor experience from the CBOE, CME, and Board of Trade. And also I am the president and owner of Forex Trading Unlocked Incorporated. And currently I'm the author of the Tiger Forex Report, as well as the author of the book High Probable Japanese Candlestick Patterns. And with that, let's get ready for all of you bulls and bears out there. Okay, so we have the forex-trading-unlocked.com website pulled up, and we already have a workstation page going where we have two moving averages. We have the 20 and the 50 up. Now, the worst mistake that many traders make is that they take a position when the moving averages cross over. When the fastest moving average crosses over the slower moving average, traders initiate a buy trade. This is because it signals the beginning of an uptrend. Conversely, when the faster moving average crosses below the slower moving average, traders place a sell trade. This is because it signals the beginning of a downward trend. Wrong. This is the biggest flaw to this approach, and it only works when the market is trending. Range trending markets generate multiple false signals. This will not bode well for your trading account. Okay, so real quickly, as you can see here, we go back here, faster moving average crosses over to longer, and here we got a nice trend, and yeah, it shows that. Then it starts to cross over for a sell, but then boom, look what happens here. Explodes and goes against it, and then all of a sudden it goes into buy mode, and when it goes into buy mode, the market actually breaks through it, and it takes a while for it to catch up. So when you can see how once it starts to break a trend and not even a range trade, it starts to chop you up and gives you lots of false signals. All right, so another mistake traders make is using too many moving averages. Let me add the 200 right here. This process delays signals longer, and this causes the trader to miss out on much of the trend when there is one, and there is also too much of a lag involved in the timing of order entries. In this case, less is more. As you can see, if we go back here, sometimes they're close, but look at here, like you had a sell signal here, when the market was trading all the way down here before the 200 crossed here, so you would have already missed this whole part of this break. It was a nice head and shoulders pattern. This pattern would have gotten you into the slide long before the averages. So there's some weaknesses to just using moving averages, and especially moving average crossover. It's very important that you recognize this, okay? So this method works best on longer term time frames. Lower time frames tend to settle into ranges longer or have violent volatility. However, we have adopted this method to work on the 5-minute chart time frame on up. The key to this method is discipline with the entry order, the stop risk order, and the target exit order. Now, I know that the recent FTX blow up, one of the people there said using stops is a stupid money management thing to do, when actually stops are one of the smartest money management things you can do for any type of trading and investing. So showing what kind of a moron was running FTX and crew. So do not deviate from these rules, okay? These are here for a reason. Many methods are very complicated, but this one is very simple. Make sure the steps are followed properly. If you enjoy this content, please make sure that you like, subscribe, and share this video, please. And we would appreciate it very much if you do so. It helps with the algorithms. And also any questions you leave in the comment section, we will make sure that we will respond to them and get back to them. All right, So the first thing that you need to know is that you need to pull up the forex-trading-.com website. There's no login or membership required. Once you get to here, you want to use this navigation part here, okay? So you're going to click on the workstation tab right here. Okay, now once you have the workstation page pulled up, you're going to toggle down and you're going to see a chart. Now this one already has a bunch of stuff pulled up, so we're going to go real fast through this one just to show you how this works really quickly. See, no login, nothing here, and there's not many ads to pop up. There's a calendar we're going to skip past. Now here's the brand new chart for you to use in real time if you're paying attention with this. Pay attention as we're going through this video, or if you're watching this after we post this video. Okay, so here we have a Euro US dollar chart pulled up. We removed the volume and also the notes on the side. Okay, all right, so we will now set up our indicators. You're going to go to the indicator tab and click on it. Now you're going to scroll down, okay, and you're going to keep going down until you hit moving average convergence divergence and choose this indicator. Below that, you're going to click on the moving average exponential, okay? And lastly, you're going to scroll down a little bit longer, further down, and you're going to click on the Supertrend Indicator. Now we will adjust our indicator settings, okay? So now remember, when we first started out, you had these moving averages, okay? This is a totally different deal of what we're using here. There is some moving average crossovers in the MACD indicator here. We're going to shrink this down to give us a little more room. And now we're going to adjust our settings. So first, let's highlight the EMA indicator like this and select settings, okay? And then we're going to change the length to 200 and click OK on there. Now click on the settings icon for the Supertrend Indicator. The ATR length needs to be changed to 14, and the factor needs to be changed to 2. Now click on the OK. So we've changed 2 of those. We've adjusted them to our settings. All right. Now lastly, click on the settings icon for the MACD. Change the fast length to 13. Change the slow length to 21, and the signal smoothing change to 8. Click OK, and you are now completely set up. Okay, this is right here all you need to use this moving average crossover system that we're going to show you to find buy and sell signals. Okay. All right, so now we will show you how to apply this method. The 200 period moving exponential moving average defines our trend for us. If it is trending higher, then it acts as support for our trades. If a trend is lower, then the average acts like resistance. This is the key to knowing if you will take long or short positions. The Supertrend Indicator gives us our entry, buy, and sell orders, and the moving average convergence divergence indicator signals when the situation is ripe to buy or sell the market. What do you think of this video so far? Leave a comment, question, or criticism to let us know what you think in the comment section. It would be really appreciated. It's very good once again for the algorithms, and we would also appreciate the help very much. All right, so now we're going to show you in real time how this is. We have the euro right here. Now let's show you what's been going on. This is how the trade works. So the key is to knowing that the market has been trending lower right here. Now that the moving average here was pretty sideways. It had been going up, but then it started to go sideways. The market was above here, and then all of a sudden it starts coming down. So the question is, would we be looking for a sell signal? Well, we would. The only problem is the MACD is below the histogram. We're only taking signals when they're below the histogram or above the histogram. Buy signals below and sell signals above. Get a little bit bigger there. Okay, so now as you can see, the trend was trending lower, making lower move lows and lower move highs. The market had set this lower move low, and then we have the moving average crossovers coming together, and the market takes out the super trend red line right here and makes a higher move high. This is our buy signal. This is where we put in a trade, a limit, or try to buy the price here, which was at what is this, 103.20, and then we put our stop in right here. We use our long entry, we put our risk right here at the low, and you can see we have a 1.5%, 1.5 target to the upside. We are just shy of that right now. So currently in the euro US dollar, we have this trade that is going on right now currently, and you can see that it was taken on this bar, and we were able to get the price executed here, or around that you would have been able to. And the key is that you pull down, you know that where your entry is here, your risk is this past low previously here, and your upside target is 1.5 times the risk that you put on. And right now the market is trading at 103.61, and it needs to get to 103.83, and it's already gotten up to 103.77, so it's pretty close to getting up to that area right now in the euro US dollar. Now this is live in real time as we're filming streaming this webinar out to you and teaching you this method. So once again, there's three components. You have the 200 period exponential moving average, you have the Supertrend Indicator, and you have the MACD moving average convergence divergence. Now the MACD, when you have a buy signal, that is when you have the MACD below the histogram that has a crossover. When that crossovers and also the market breaches, in this case to the upside, takes out the bearish red line here from the Supertrend Indicator and makes a higher move high, which means it's breaking the trend to at least neutral, that is when you have your buy signal. Now, this is very close to achieving its target. Once it reaches its target, the market may still continue to go further. So, and the big question is, do you leave the trade on or do you get out at the target level? Well, once again, when we started this webinar out, we said that you have to stick to the rules. So stick to the rules. There's your entry price, there's your exit price, and there is your also your stop risk. So now the market could go further. If you want to do this trade and have two positions on where you get out of one at the target price, I would suggest that once you do reach your target price, if you have one or more other positions on, that you put a break even plus a few pip stop, so that no matter what, you don't turn a winner into a loser. And as the Supertrend Indicator continues to rise, I would start to use that as a trailing stop once it gets past your initial target. So now, just to show you that this also works in other markets, we're going to show you how it works in the British pound. Oops, let's just use this chart right here since we already have it set up. So real quick before we end this video, we have the same situation here where we have in the British pound, we have the moving average crossover. We got to move this over a little bit. Okay, where this crosses over right here, we have a situation here where we have a lower move high. We have this lower move low here. But then we have this higher move low. Okay, and that sets us up for a long position right here. Once again, and we set the profit target at 150. Well, there's this 151. So you move your, remember your target, here's your buy. So the market's trending lower move lows, lower move highs, makes a lower move low, lower move high, higher move low. The moving average already crossed over for a buy signal below the histogram, and then when the market takes out the super trend bearish line right here, this becomes your buy signal. You get long at this point right here, and then you know that your risk is this last current swing low, which was your higher move low, which is lifting the trend in the short term, which is giving us this bullish trade, and then you have your target up here, which is 122.61. Currently the market is trading at 118.67. So now this is on a daily basis here. So you can see that this works on a daily basis just like it works on a 5-minute basis. Pretty interesting there, huh? So we have the daily basis doing this for the British pound, but let's see what happens if we go to the 5-minute also for the British pound. Okay, so in the other one, we already know we have that big trade set up. Look at what's going on here. So we have a daily buy set up for the British pound, but look at this. Here's a lower move low that was just set not that long ago, less than an hour ago, okay? And then look, this is an identical pattern here. We have a lower move high, and then we have a higher move low. Once again, let's go back to the daily so you can see this. This is all in real time here. Lower move low, lower move high, higher move low. We have a buy signal. We already know what that trade is. This is on the daily basis. There's a buy signal for the pound US dollar. So this means that this hourly trade is going also with the trend. So we know that that's a good sign, that this is a good signal to take a buy signal on. And let's see what this yields here as well. So we have this higher move low. Excuse me. We have this lower move high, higher move low, and then we breach this area here. Now we'd already taken out, let's show you this here. Here's where our MACD crossover is. So this crossed over first. Then we made the lower move high. Now we took out the Supertrend Indicator, but we hadn't confirmed a higher move low. So this means that we made this higher move low here. This lower move high becomes our buy point. You could use the original super trend level once again here because the market is finding support, but the best thing to do is actually use the breakout level there. Then we come to here. Let's move this back a little bit. Okay, and then we know that, there we go, this ratio here. Sorry about this, folks. I don't know why we're not getting. There we go. I think I had to do that. There we go. All right, so we have 131, so 150, 1.5 right there. So we have a current buy signal here at 118.57. The market's trading at 118.69. We have a target price here of 119.58. Okay, and we know that our risk is the current swing low of 117.91. So on the daily we have a signal here, and then we also have, and remember we had the moving average convergence divergence that had a crossover here. We had the same pattern here with the higher move low. Super trend had been taken out, and then once it breached this area, boom, you take the long trade. So in the euro, we are still hovering right below this target here at 103.83, and we have a buy signal in the British pound as well. So simultaneously we have two separate trades, and you can do all of this on the workstation page here at www.forex-trading-unlock.com. Remember, you go to the nav bar, you click on the workstation page, and while you're on our website, make sure to use this little thing here and tweet and pass us out on LinkedIn. Share us. It would help us grow the community and make more videos for you. So we appreciate your time today and hope that this signal helps you in your trading, both of long-term and short-term. You take care. Have a good day.